Hello everyone, welcome back to my channel CMA Future. We are here with a new video related to financial accounting, paper number 5. Financial accounting is divided into 4 sections: section A, section B, section C, section D. So section A is accounting basics. In that, fundamentals of accounting, accounting of special transactions are covered. It contains of 25 marks. Next, section B, preparation of financial statements, preparation of financial accounts of profit oriented organization, financial accounts of non-profit organization, incomplete records, partnership. In partnership, retirement, admission, retirement, death, dissolution, amalgamation, joint life policy, conversion of partnership firm into company, sale of partnership firm into a company. So it contains 40 marks. Important, very important, and very many questions have been asked. Next, section C, self-balancing ledgers, royalties, hire purchase and installments, branch and departmental accounts. Section D contains computerized environment and accounting standards. It contains 15 marks. Very easy scoring part it is. Computerized accounting standards, AS1, AS2, 7, AS9, AS6 and AS10. Okay, so in fundamentals of accounting, basics have been covered, and in special transactions accounting, in special transactions, the special transactions, first one is bills of exchange, then comes consignment, then comes joint venture, and next one is insurance claim. Insurance claim. So now insurance claim is very important topic, usually asked questions. They have asked in previous question papers. So this is a scoring part. And in basics fundamentals, basics are covered like journal, ledger, trial balance, all the financial statements, subsidiary book, and then cash book is covered, rectification. This is very important chapter, where every year they have asked in paper, favorite of the institution. Now depreciation. Okay, this is also covered in standards. Okay, this part is important. And here this is 40 marks. Okay, we have to study important chapters like admission, retirement, death. Any one question will be asked, two questions will be asked, either of admission, retirement, death, dissolution. Even these are important, but small questions will come, not big questions, or like 15 marks questions will come. And this profit oriented is important, non-profit, single entry also they ask for 7-8 marks. So very important chapters. So today we are going to start with section A, accounting basics, fundamentals of accounting. So guys, if you don't even remember anything about accounts, then also you can study through this video. So the basic parts of accounting which we have studied in 12th 11th 12th and foundation of CMA or CA, so for those things will be covered under this video. First we need to know why accounting we prepare. As we know, the market is expanding, and the market is expanding, the business also expands. There are many types of businesses like sole proprietor, partnership, body corporate business. So when the business increases, even the work increases, people doing the work, that also increases. So from that will start from where the money comes, where the money is sent. Those all things cannot be recorded by remembered by the human being. So we started to record it. Hence accounting became important. So why we prepare accounting? We prepare accounting for two main reasons. First one, we find out the results. How we find out the results? Through profit and loss account. And the second one, we have to find the position of the company or entity. How we find out? Through balance sheet. These two accounts cannot be prepared directly. Hence we need to prepare journal, ledger, trial balance, etc. All the books of accounts, that is set of books of accounts, we need to prepare. Okay, so accounting has four fields: bookkeeping, financial accounting, cost accounting, management accounting. What is bookkeeping? What is bookkeeping? Bookkeeping is an art of recording business transactions in a set of books. So as I said before, we cannot remember everything, all the transactions we have to record, where we record in the books, set of books. These are the books: journal, ledger, trial balance, subsidiary books. These are the set of books. So bookkeeping is an art of recording business transactions in a set of books. Nowadays bookkeeping is computerized. We have software techniques, we have a software developed, so in that we record all the transactions. Next one is financial accounting. Bookkeeping is a part of financial accounting. Okay. What is financial accounting? An art of recording, where we record in journal, classifying and summarizing. We classify the accounts in ledger, and then we summarize in trial balance in a significant manner and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. So the transactions are being recorded, that is in journal, then classified, that is in ledger, and summarized, trial balance. So these transactions are recorded in terms of money, whether the transactions are partly financial character, non-financial character. The financial character, if it is partly financial character also, we have to record in the books of journal. And then after preparing these all, classifying and summarizing, we interpret the results. How we interpret it? Through profit and loss and balance sheet. Okay, next comes cost accounting. This is the definition of cost accountancy. Cost accounting definition, I'll just write it down. Cost accounting definition. Cost accounting is a branch of accounting dealing with classifying, recording, allocation, summarizing, and reporting current and prospective cost, and analyzing their behavior. So what it means? Cost accounting, it is a branch of accounting dealing with classifying, same as it was in financial accounting. We classify, we record, we classify. Same in cost accounting, we classify, we record. Here the only changes is allocation. We allocate the cost. Then we summarize it, and reporting current and prospective. Prospective means future cost. Okay, so not only current cost we record, we classify and summarize, we even do the future cost, and then analyze the behavior of the cost of a product. We analyze it, and we analyze it. Okay, now what is cost accountancy? We'll see. Cost accountancy is application of costing. What is costing? Costing is a means particular product cost, that is price of a product. So cost accountancy, application of costing. Costing, we saw the meaning of costing. And then cost accounting, we also saw the meaning of cost accounting. So principles, methods and techniques to the science, art and practice at cost control and the ascertainment of profitability, as well as presentation of information for the purpose of managerial decision making. So what it means? Cost accounting principles, method, techniques which are covered, those all are applied. Application means applied to, for what reason? For cost controlling, to the product of the cost, to control that cost, and ascertainment, profitability, to know the profit. Now the product is manufactured, so we have rupees 100. A particular product cost is rupees 100. So next time when you are manufacturing, it costs 105. So we need to reduce, we need to control the cost. So practice at controlling the cost, and after that all expenses, after removing all the expenses and everything, how much profit we made while particular while manufacturing a particular product, how much we made the profit, that we ascertain, as well as presentation of information. These all information, what all expenses we incurred, what is the price of the product, uh, everything information, for what purpose? For managerial decision making. Okay, next comes management accounting. The process of identifying, measurement, accumulation, analysis, preparation, presentation, and communication of information used by management to plan, evaluate, and control within an entity, and to assure appropriate use of accountability for its resources. So why we do management? So management we do management accounting we do to understand the company. So first of all, what we do, we identify, we measure the measure during the period, accumulate the results, then we analyze it, and then we prepare and communicate the information to the management, who all the manager of the company. Within the entity we do it. For what reason? To plan, evaluate, and control. What we control? The resources, and to assure that we use the resources appropriately. So management accounting not only do these things, they also prepare the financial reports for non-management groups such as shareholders, creditors, regulatory authorities, and tax authorities. So we provide the information, what all the information we have collected from the financial accounting and cost accounting, we all collect it, we identify, we interpret it, and then prepare the reports and submit it to the shareholders, creditors, and regularity authorities and tax authorities. Okay, so I have prepared some my own notes, my own self-made book of accounting. All the topics have been covered here till standards. Okay, so we'll see through it. On this meaning I have written of accounting. So any question any question has been asked, like users of financial statements, it has been asked in December 2019. Objectives of accounting, they ask anything they ask. So just write one line. Accounting can be stated as a process of recording and maintaining the financial information. Start with this, and then you start with your regular answer, regular answer, whatever they have been asked. Okay, now next one is procedure of accounting. There are two parts in that. First one, generating financial information, recording, classifying, summarizing, analyzing, interpreting, and communicating. Recording, we record the transactions in the journal, that is the first step. Classifying, we analyze and segregate the transactions, where we segregate in the ledger books. Summarizing, all the ledger balances, we summarize it and present in the financial statements. So financial statements includes trial balance, profit and loss account statement, balance sheet, cash flow statement. Okay, then summarizing, after summarizing, analyzing financial statement. These financial statements, we analyze it and draw the relationship between among those items. Then interpreting, this is a final step of accounting. What we interpret? End users derive useful information of the company's financial conditions and profitability of the business, whether the company is making the profit or it is going through loss. Then we communicate them to the shareholders, external users. Okay, so this is next one. Using the financial information, what we do, we communicate it to the users. Which are the users? Internal users are there, external users are there. Internal within the entity, external outside the entity. Okay, internal entity are management and owners of the business. External are investors, lenders, employees, authorities, etc. Okay, so they have been asked this question. Users of accounting information question is been asked in December 2019. Very old paper, but still important. Internal users. In internal users, management and owners. Management needs to take various decisions on budgeting, forecasting based on the past trends and market analysis, for which they need to evaluate their financial statements. So to make these decisions, we have to evaluate the financial statements and to understand what is the position of the company, financial position of the company, so that they can take a better decision to improve the weaknesses of their businesses. Okay, very easy words I have written. External users. In external users, investors of the company wants to understand how the company has been performing. They can take various investments related decisions on the basis of information. So when we prepare this financial statement, we come to know what is the position, hence they decide whether what all changes we have to do. Employees career growth depends on the growth of the organization. If they grow, their salary grows and employment grows. Lenders are interested to know how profitability of the company is performing to ensure that their loans and interest are safe. Because they provide loans, they need to know whether the company is making profit or loss. Suppliers and creditors. Suppliers and creditors are same as the lenders. They are interested in performance of the company so that the company will be paid on timely basis. Customers are probably repetitive, and if the business position come in trouble, the customers need to find a replacement of the product. So needs to find a replacement of the product. If it is if the company is not making proper products, then the customers also will find the other product replacement they do. Statutory authorities make sure that the business is operating within the laws and regulations. Okay, in the next class we will see objectives of accounting and some differences written are there. So we'll see in the next class. Thank you.